Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, morning.
What a wild ride we've been having, up and down and up and down, over and over again. Last 3 days are the case in point. And it began last Thursday with that super rally with a near 3% pop. And then Friday we had that 2.5% drop, almost taking off all of the gains from the previous day. And yesterday you have a 2.6% rally once again. Day on day change. Forget about what happened from intraday lows or intraday highs. Day on day, this totals up to a 6% move on the largest equity index in the world, the S&P 500. So this has been a bit of a wild ride. That's what we have. But the question for us really is, are some of these global issues going to get out of our way? Are we set for a bit of a clean run here? The SGX is indicating that 150 odd points higher after a decent session yesterday, 17,461. Sonia, hi. Nigel, hi.
Hi, Prashant. Good morning. Nigel, morning. And the other big question that we're asking is the risk on back in the US markets,
yes,
right? I mean, it may be too soon to tell, but there are some signs that are indicating that. The dollar index, for one, has come off definitely from the highs of 111. The Dow Jones, as pointed out earlier, a sharp surge is what we saw overnight. Not just that, the Nasdaq has seen its best day, I think, since the month of July. So is risk on back? In our own markets, the FI selling has reduced quite a bit, so which is great news for the bulls. Yesterday, FI sold just about 370 crores, while DI has bought a huge chunk, almost 1,600 crores. And I think the average selling of FIs in the last 5 or 6 trading sessions has been in excess of 1,100 crores. So this come off is quite positive for our own markets. A couple of levels that you can watch on the upside. A firm line in the sand on the downside, as we know, is the 200-day moving average. But on the upside, the 50-day moving average of 17,490 is going to be tracked very closely. And the high of October 6, somewhere to the tune of 17,330, perhaps is the next mark to watch on the upside. But for today, definitely the start of the day could belong to the bulls. And then we'll take it from there, because there's still a lot of volatility, right? We're dealing with our own earnings on one hand. And then on the other hand, there's so much turmoil in the global markets that still exists.
I'm just hoping that some of these global issues just stay aside for some time and we run ahead, bit of a clean run here. And the reason I'm saying that is because, to begin with, as I said, there's that 6% move we've seen in the last 3 sessions. Sometimes what happens is markets, when they're trying to base out, do give you these kind of extreme volatility days. It's happened here. It's happened in the US, prior to this as well in previous episodes. So 2% up, 2% down, 2% up again. The last direction is up. And that's the reason why I'm saying that maybe, just maybe, this run may extend. You don't have very much by way of top-tier data. When I say top-tier data, you don't have like a big CPI number or a jobs report this week. So, there is little in terms of data which could interrupt this run higher. Technically as well, positioning across equities remains quite short. I'm talking about US. And this has been true last week, the week before that. And that is the reason why, naturally, many were expecting things to turn around prior to CPI or prior to jobs report. It did not happen. Maybe this is the time it will happen. Again, sticking with technicals, Nasdaq 100 is closed above a psychological horizontal resistance at about 11,050. This is the Nasdaq 100. On the S&P 500, the level to watch is the October 2022 highs, which stands at 3,820. You basically, the market here has been doing very well, relative outperformance. So it's not as if it's been falling like 9 pins because US is falling. But what if the global setup becomes a little more constructive? It adds to the confidence that you don't have to watch your watch your back to say if another train is coming our way and you'll get a big down day, etc. So that is essentially the point I'm focusing and kind of sort of laying out these levels in the US as well. So the relative outperformance in India is extremely apparent. Oil prices, and I've made this point again and again, actually in this cycle, what has remained of paramount importance more than the dollar index, at least in terms of channels through which these global macros hit us, oil has trumped the dollar and everything else. Oil is well behaved. It's under $92 on the Brent, and I think that is good. That is very, very good. You get a gap up, and I think the question becomes what to do. You'll start above last Friday's high. You will start above the 50% retracement of the September fall as well, which stands at 17,421. And I think, this could be an interesting session on the upside. you are basically looking at the next level at about the 17,491, which is nothing but the 50-day moving average as well. Actually, you're basically going to be knocking around those levels if SGX, the opening on SGX is to be believed. Banks continue to be the favorite area. And I think, it was apparent yesterday as well. PSU Bank Index ended up 4%. The private bank index was up 2.5%. And financials are perhaps the most attractive hunting ground if you're looking for mispriced opportunities. Valuation-wise, they still remain below where they were a couple of years ago, or their median valuations as well. Just a couple of things, but banks, I think, continue to be an attractive area to look for opportunities. SGX indicating a 140-point higher start. Nigel, what are we watching?
Well, yeah, the Nifty and the Nifty Bank, they're like two batsmen, right? They're batting in there. The Nifty Bank is in splendid touch. It's gone ahead and conquered those two technical levels, the 20 DMA and the 50 DMA. Now it's looking at the non-strike and saying, your turn. Nifty, it's time for you to go towards that 50 DMA. Whether or not the Nifty can get there and trade about those levels, that's going to be extremely crucial. But the setup is good. US markets are good overnight handover is what we've got. The dollar index hovering around that 112 odd mark. Brent as well pretty much under control at around $92 per barrel. Remember, you had some comments that came in from the UK Finance Minister, Jeremy Hunt. They said that all those tax cuts will be scrapped. So that's where you saw some strength on the pound. And that's why, in fact, the dollar index is at around that 112 odd. The shorts could be forced to get squeezed out. And that's going to be the most important play in trade today. Institutional data for the last couple of days has been good because the DI buying has outweighed the FI selling. So they're bought for 2 straight sessions. Remember, prior to that, the net sell number from institutions was around 400 crores odd. On the FI side, in the index futures, well, there was some mild short covering that we saw. And it was clear the Nifty Bank, that's coming in for a bit of a short squeeze because the open interest was down out there and the index did surge up. And now the short positioning is down. From around 85%, it's come down to around 76%. The biggest positive for me, though, is the way they're writing puts. And yesterday as well, they wrote puts big time. The 17,300 put, 17,200 put. Between them, there was 50 lakh shares getting added. So there's an attempt that the bulls are saying that 16,950, maybe we'll move the base up a little bit. That's the sense you got. And the put writing is really hardening. But in case things go wrong, there is some put buying as well that we have seen. The key factor to focus on now, the Nifty Bank, it's got, the momentum going with it. Will it move towards the fresh all-time highs? That's close to around 41,850 odd. That's a level we were just in the last month or so. If that happens, then you can see the Nifty drifting up as well. For today, we're opening up near that resistance zone, the 50 DMA. That's at around 17,491. So keep an eye on that mark. If we can conquer that level and trade above that level, say for the first couple of hours, then you're gradually going to be making that dash to around 17,700 from where last time around we did take a turnaround. So good to see SGX Nifty, indicating some follow through today, but sustaining this gap most crucial.
Okay, I like that we're talking about all-time highs in the market, right? It's a great time to be talking about it as we're heading into Diwali as well. I mean, the bulls have it at least today, and we're not too far away from that all-time high on the Nifty as well. 18,600 was the 52-week high that we hit. We're about 1,300 points away from that. But purely for today, it's a 140-point bump up that we're looking at, and things have cooled off on the dollar index as well. Just wanted to mention that. So 111 was the high that the dollar index had hit. It's cooled off, so the chart should come up for you. 100. Okay, now it's still high at 112.17. But anyway, let's see how things stabilize. For now, there is green across the screens.